Here's the theory. Every single asset will inevitably be tokenized, traded, and placed on the blockchain. Here's the math. Crypto is still only half of 1% of the global financial assets market cap. Now, with crypto recently recapturing the $1 trillion mark and the global financial assets market cap estimated to be approximately 200 trillion, that puts crypto on a potential 200x path. 200 times. Our next guest, Vineeth Bhuvanagiri, will help us analyze if these numbers have any weight whatsoever. Vineeth, welcome to the Daily Drop.
Great to be here, Bobby.
So look, this is, I don't know if it's speculative or it's like super intense, but it's definitely something that I've read over and over and over again, right? So the global financial assets market cap is estimated to be about $200 trillion. How much of that can be tokenized?
So I think you can break down this question into like two possible scenarios. One, which is how much of that can be tokenized, and then the other one is how much of it should be tokenized. So kind of answering the first question in regards to how much can be tokenized, we believe that almost any asset can be tokenized if there's an appropriate, I would say, custodial structure to be able to make sure that that asset that's living on the blockchain ties into a perfected interest in the underlying asset. The question that I think that the crypto industry should be asking ourselves is what assets should be tokenized and where can we deliver like the most efficiencies using the tools and capabilities of blockchain technology to drive the most value. Because there's assets that exist currently that have a good enough clearing and settlement mechanism within the current financial infrastructure that exists today. And we think that going down the route of things that are much more difficult to clear and settle is where at least blockchain and tokenization should start to get an inroads into, I would say, more so traditional asset classes.
I mean, look, it's fascinating. Both observations you've made are fascinating, right? Because yeah, there's a cautionary tale. You can do it, but should you do it? But let's stick to could you? So I mean, it's crazy that you can. So I guess here's a question. This is just basic math, but so if crypto is only $1 trillion, that's the market cap, are we potentially looking at a 200x investment opportunity here?
I would say 200x is a little bit high in the sky. I wouldn't say that it's out of the picture, but it's more so like where are the areas in which like you can get into for the tokenization of assets that the market is growing. So for example, carbon credits right now. A lot of people want to get access to the carbon credit markets, but it's very difficult to do so through the current clearing and settlement systems. If you were to tokenize, let's say, carbon credits and have that flow through the blockchain with the benefits of it being transparent, it being immutable, and it being trackable, there's a way for you to tap into, let's say, a potentially trillion-dollar industry in and of itself that currently isn't being qualified into this pool. So is there upside potential, I think is kind of like the general question. Yes, there's a ton of upside potential within crypto, but it's also like it has to be, at least us within the crypto industry, need to figure out where exactly we should be focusing our efforts in order to get to those, I would say, multiples in regards to the tokenization of assets, as you so mentioned.
Dude, you are so high level. It's crazy. I talk to all these brilliant people on this show, which is one of the joys of my life, truly. But okay, so what is a realistic projection then for the tokenization of assets? Because obviously, this is more just for the purposes of intellect, right? To be like, oh, what could be done? But what do you think is realistic? Like, how many of these assets do you think will be put on the blockchain?
I think, starting off, cash is a super easy initial use case. And this is kind of currently what's taking place today. If you look at kind of the settlement numbers for stablecoins versus that of Visa and MasterCard and other payment rails, stablecoin daily settlement figures are now basically surpassing that of Visa and MasterCard. I think right now it's mainly just tokenization of dollars, but we can move to euros, yens, a bunch of other currencies and give people access to these currencies that don't actually have traditional, I would say, ways into the financial system. Beyond that, I think newer asset classes, again, as mentioned before, carbon credits or precious metals, commodities, could also be the next step in this tokenization journey. I think towards the end of this, you'll start to see, like, I would say, more matured asset classes, such as securities, bonds, derivatives, so on and so forth. But the current world has a mechanism to be able to address a lot of those problems. So I think the focus for the blockchain community should be where's the low-hanging fruit, where are places where there's pain points that the technology of blockchain can actually be utilized in order to drive the most benefit. Because for me,
Okay,
it's like
let's you know what, I mean, dude, you're awesome. We got 3 more segments of you, but let's go to break here on the Daily Drop.